Welcome. We are in Chelsea, Alabama. I'm at the office of Mr. Joseph Buff, insurance agent. We've got a lot of things to cover today because insurance has been a hot topic. Every investor I talk to keeps saying their premiums are going up and our premiums are crazy. So I want to kind of get to the bottom of it a little bit and kind of
Yeah.
see what's going on and if there's anything we can do to kind of help those rates for us as investors. But let's just start off. Joseph, I've known you for a long time and we've been kind of doing business for a long time and you've been
Yeah.
in the business for a very long time. So just kind of give people your background as an insurance agent when it comes to investors here in Central Alabama.
Okay. Yeah. Appreciate you having me on. So I've been in the business a little over 15 years from now, or 15 years now, and kind of cut my teeth in the investment real estate world. I came out of a banking background, did a lot of investor stuff there, and so I just kind of picked that up, and I found that we had a really good niche for that. Uh, in most businesses, they say the riches are in the niches. Not that we're getting rich over here, but when you focus on a niche, it kind of gives you a nice kind of platform or a base to kind of build your business. And so that's kind of what we did. And I would say it's probably still, as long as we've been in the business, it's probably still 60% of what we do every day. So it's a
Investors.
pretty large percentage of what we do every day is dealing with investment properties.
Take us through kind of just the typical investor that you're working with today, because I know you're involved in a lot of the local meetup groups, and
Hmm.
you're a great networker. That's how I first met you, and how
Hmm.
we've been able to do business. But take us through like kind of what's your average investor look like? Who are you helping? Who's your customer?
I would say we get a lot of our clients from, we deal with a lot of people that are buying maybe four or five at a time, a lot of out of state folks that a property manager might send our way that says, hey, I've got an investor, they're buying five properties, can you help them? We also deal with a lot of just the folks that are just getting started. Maybe
Mm-hmm.
they really kind of holding their hand through the process. Maybe they're just starting out, they don't really have a lot of money. Maybe they're doing private funding on the whole thing and they're really concerned about, okay, I want to make sure if something goes wrong, I'm covered properly. So
Right.
we deal with a lot of that. We do some multifamily stuff as well. We do a lot of fix and flip. So there's really not a whole lot we haven't seen
Mm-hmm.
as far as what we deal with. It's really just, I think our expertise comes in as far as knowing the market. We study this stuff. I study this stuff religiously, just insurance in general, kind of
Yeah.
an insurance geek. You kind of have to be to know what companies are doing what.
Mm.
And so that's kind of where we're going to come in to say, okay, you're doing what? Here's where we need to go with that, and we don't waste their time, our time,
Right.
So
Because I guess there's a lot of different, for those that don't know, and I don't know a whole lot, so I want to kind of get to the bottom of some of this. But there's a lot of different products that you can offer. Obviously, you're a farmer's
mm-hmm.
agent, but you don't just offer farmers insurance. How does that all work? And if there's different products you said for different types of things. How does that kind of all work?
Yeah. So the primary company that we originally went with is owned by farmers, which is Foremost. And
Mm-hmm.
if you probably look and took a snapshot of the market, I don't know this number off the top of my head, but I would say they probably have 70-80% of the market share in the Birmingham metro area as far as rental properties. So that became a problem a few years ago. So we started to see what I would call an inventory shortage for insurance. We had issues with companies wanting to take too much risk in a certain area. So
Mm-hmm.
Foremost shut down Jefferson County about 2 years ago, which
Wow.
really caused some disruption. Um, and we've had multiple conversations with the higher ups there, and it's basically a deal where they can't price it to the point where they're comfortable with it right now. I was like, well, can we just raise the rates 30%? At least sell the product. And they're like, it's an exposure issue. They're worried about a tornado coming through and knocking out 30 houses in a 2 mile radius.
Mm-hmm.
And so with the technology we have now with insurance companies, we can key in a quote with some of our carriers, and it will tell us they can recognize the exposure in certain areas, and they can say we've got too many on that street or too many in that zip code. We don't want that one. So the technology's kind of worked against us a little bit on
Mm-hmm.
that. And so what's happened is we've expanded our market to some other carriers. There's been one new carrier that's come in the last couple of years in Alabama. It's been a big help for us.
Who's out?
Steadily is the
Okay.
name of that one, and they'll do fix and flips, short term rentals, long term rentals. Their pricing's pretty good. Their
Mm-hmm.
underwriting's easy to deal with,
Yeah.
so that's been a good solution for us. still use Foremost for a lot of the outside Jefferson County issues, and
Mm-hmm.
they'll smooth that out eventually once they get more policies written in other parts of the state to kind of level out their exposure. I think
Mm-hmm.
they'll open back up, but
Mm-hmm.
it's been a challenge the last 2 or 3 years. It's kind of a jigsaw puzzle trying to figure out where to put business. You don't want to move everybody out of Foremost and dump them into one company, because then you get the same issue.
Mm-hmm.
That company gets too much exposure, then they start tightening their underwrite.
Mm-hmm.
So it's really just I've been just trying to kind of tell my clients with Foremost, hey, if they're not non-renewing you, which they haven't been doing, let's just leave that sitting there. Any new ones you get, we'll start placing with some other carriers to kind of spread the risk out. So
So how does it work? Because I know you're a farmer's agent, but you can go to some of these other carriers. Are you constantly on the lookout for some of these other, insurance companies that can, or how does that work? Like, is it like an
yeah,
umbrella type
it's
of thing, or
yeah we're so as farmers agents, we can write outside business. Farmers likes to have the first look at it, and
okay?
if they say no, then we have an in-house broker we can use.
Mm-hmm.
But these contracts that we got separately because they didn't have what we were
Okay,
looking for. So we, we,
okay.
we found a couple that we could do outside.
Are you still? I mean, you said your expertise is just the knowledge of the area. Do you constantly look for things that the new carriers that might be coming up?
Oh,
And is there
definitely.
anything that
Yeah.
we?
Yeah. The other carrier that we've used is MSI, a company called MSI. Used to be
Mm-hmm.
Arcana.
Mm-hmm.
Some of the big investors probably know that company, and some like them, some don't. But it was one we partnered with a local broker to be able to offer that product. Um, again, the multifamily stuff's gotten difficult the last 2 or 3 years. And just kind of give you a snapshot of what's happened in the last 2 or 3 years is, you go back to COVID,
Mm-hmm.
everybody thought, the world was going to go one direction, and it kind of went the opposite direction. There were a time I was thinking about this morning, we actually gave 25% credits on auto policies for like 4 or 5 months when people weren't driving, because our risk had changed. They weren't on the roads. And so we kind of, as a good faith measure, we said, hey, we're going to give you a credit. And you multiply that out times hundreds of thousands of clients. It's a lot of money.
Mm-hmm.
But then all of a sudden we started noticing, well, people are home more. Their small kitchen fires are starting more. What people are using their water systems more. And so we started noticing the home claims popping up. And then the cost of the repairs shot up the roof, shot out of the roof in the last couple of years with inflation.
Right.
So that's kind of what's caused, kind of a background of what's caused a lot of issues that we're running into. And investor stuff was always a niche. You couldn't just call the local State Farm guy and just write all your rental properties with
Mm.
them. It was always a niche. You always had to find the right company, right product, and so that kind of amplified that a little bit with what went on the last 2 or 3 years. But good news, I think things are starting to smooth out a little bit. The pricing is starting to level off.
Mm.
I'm starting to see some markets open back up. Again, multifamily gotten really tough. Starting to see some companies starting to get back into multifamily a little bit too. So,
Right. Well, we're on the topic, so let's dig into that a little bit more. Rates are increasing, and you just kind of mentioned some reasons why.
mm-hmm.
And then just for the regular person like me, where you kind of see things, fires going on in California, this might be going on this part of the country. Does any of that stuff outside of Alabama affect Alabama as far as rates go?
Historically, I would say no, but I think when you just thinking out loud here, and I've kind of looked into this, and what happened over the last couple of years. So California is kind of a different animal. Florida's a different animal. Even there's a couple other states are kind of do a little bit things a little different. California can't. They don't have a legislation that allows them to go in there and just raise their rates up. So it's very difficult to make rate movement in those states. Their biggest risk, obviously, is wildfire or earthquake, which earthquake's usually a separate deal.
Mm-hmm.
But I think where that's going to hit us is when insurance companies purchase insurance. So when they have a
Right.
catastrophic event happen over a certain number, it hits their reinsurance policy. So the reinsurance costs probably in a couple of years will go up due to these California fires. And that was the thing that really hurt us in the last couple of years because of inflation. The reinsurance costs went way up, and so that's just a trickle down to the client. So I think it will be spread out. You would say, well, we're not in California, but if I don't know how they do the reinsurance, if it's segmented towards state or area, or if it's just, hey, Farmers buys this reinsurance policy from Lloyd's of London, and it's spread out between everybody. But I
Mm-hmm.
think that's probably where we would see maybe some pain points on the
Mm-hmm.
reinsurance costs for
Yeah.
some of these global disasters.
Is there anything I'm sitting here thinking like if you have a good driving record,
Mm-hmm.
you get maybe a little bit of a discount on your insurance. Is there anything like that when it comes to investors? Like if I've gone so long with a claim, or if I make a claim or a couple of them, do my rates go up? Does it kind of work like that? How does it work? I guess the ultimate question is going to be: is there anything I can do as someone who might be buying and holding property? Is there anything I can do to keep my costs as low as possible with
Mm-hmm.
insurance?
Obviously, claim record is a big deal from pricing and eligibility standpoint. Um, I think the one thing we can all try to do, obviously, if you got a claim, you got a claim. But I think a lot, especially new investors that are getting in, maybe they don't have a lot of cash reserves. You can't treat your insurance policy. It's never going to be a maintenance policy. It's never going to work that way, and you're going to end up with a lot of small nickel and dime or zero paid claims that could come back to hurt you. So I think
Mm,
you have to build in. Um, you get into like AC units. I mean, that's a tough one. You're talking about $5,000 to $7,000. Nobody really wants to eat a vandalized AC unit, and sometimes people do. Um, or they'll go ahead and file the claim, and sometimes that vandalism claim might hurt them.
mm,
So I think deductibles, leveraging deductibles is obviously always a big one, and you're starting to see companies require higher deductibles. Maybe really what we're seeing on the standard market, we're seeing these 1% wind and hail deductibles.
mm,
So the stuff that was happening at the coast where you had 1, 2, 3% wind and hail or hurricane deductibles is starting to trickle up this direction. So you've either got a price for, especially the primary homeowners market, you got a price for replacing roofs every 7 to 10 years, which is what
mhm,
on average people are doing,
mhm.
or you've got to shift some of the responsibility over to the client with how you pay that claim or the deductible that they're required, so that we're shared more in the cost. So I would think just managing your insurance policy like it's a checkbook. Say, hey, I'm not going to
Mm,
file a bunch of stuff. I'm going to be responsible with my insurance because I
mhm,
know eventually it's gonna affect everybody.
mhm.
And then probably leveraging deductibles and utilizing higher deductibles.
So, okay, leveraging deductibles, utilizing higher deductibles. What take me through that? Like I don't know what I'm talking about. Like
Well,
what?
if some policies might still allow 1,000 or $2,000 deductible.
Mhm.
Maybe if you go to 5,000, it might save you $200 per policy
Okay.
multiplied times 10 properties, then you're saving a pretty good chunk there. We actually had one investor that got to the point, and this is a real conversation. They got to the point where they had, say, 30 houses, and they're like, well, the insurance has cost me $700-800 a year. I can take that $800 a year and buy a new house every so many years.
Mhm.
And that's fine. And he tried that, and then he got hit with two, bad losses. He's like, well, that didn't work. So
Wow.
you can look at those numbers and do it. I just think most of the time insurance, unfortunately, it's a necessary evil, and from a liability standpoint, particularly, you want to make sure you have
Mhm,
good liability coverage.
mhm,
And that's the one thing I probably wouldn't short. You need at least 300. We usually quote 500,000 or a million for liability
mhm,
because that's the biggest thing that investors are concerned with.
mhm. And when you say liability, you're talking about a tenant possibly slipping and falling, or a tenant just doing something on the property whatsoever, or maybe not
Yeah,
even a tenant. Maybe somebody who's
yeah,
just.
slip and falls are your biggest one.
Mhm,
There's a couple different types of liability. There's a personal liability that will
mhm,
cover like even your wrongful eviction and things of that nature. Usually, your property manager is kind of covering that on their
mhm,
on their end. But there are some of these policies that will pick up some of those type things, contractual disputes, whether
mhm,
it's just discriminatory or whatever the case is.
mhm.
But yeah, somebody getting hurt, slip and fall on the property is the
Right.
biggest one. So.
Okay. So I want to kind of distinguish between a rental property, someone who's buying to hold, versus someone who's buying to rehab and fix. Probably in the beginning, both of those properties are going to be vacant. So, what do you suggest? What should we do? I come to you, and let's just start with a rental property. Joseph, I just bought a property. It needs to be rehabbed, but I'm eventually going to put a tenant in it here in a couple months. What should I do today? And does that need to change
Mm-hmm.
in a couple of months once I put the tenant and hold it
Yeah.
long term?
I think the biggest thing as a consumer you can do is make sure you disclose what you're doing on the property, because the agent can sometimes make some assumptions, and if there's a claim that happens very quickly and it's not occupied or something's not going the way it was disclosed, it can cause a problem on the claim. Most companies, it's not a problem. It might be a slight difference in the rate or something for that short period of time.
Mm-hmm.
But if you're doing a fix and flip, I think the biggest questions we've gotten is builder's risk versus vacant. Builder's risk will actually cover materials. So if you've got a bunch of materials that you're just dumping at a property, you might want to go builder's risk as far as trying to cover some of those materials cost. Most of the time, most of the companies, if you just do a vacant policy and you're doing interior, remodel, you're putting in new floors or painting and things of that nature, the vacant policies are going to be fine. But you don't want to list one rented if it's not going to be rented. I think there's some leeway in there, probably 60 days maybe to get a tenant in. But most of the time, most policies will have an option for a fix and rent or fix and flip. I know the new company Steadily has a fix and rent or fix and flip. So they actually have that designated where you can pick that. So
now, so what if I hit either one of those designations? What happens to the premium? What happens to the deductible? What happens to?
Yeah, it's there's some, I would say premium difference, a little bit of premium differences in there. Off the top of my head, I'd probably say it's a 20%, difference in the rate. It's a short-term deal. So most of these companies allow you to pay quarterly or monthly. So then we just go in there and make an endorsement and flip it over to rent it, and then it may come back down.
Right.
But yeah, we've seen, and the big one is the short-term rentals, where somebody says, I got a rental property, but it's a short-term in Airbnb.
Right.
Some insurance companies don't like that at all. Some of them require a certain endorsement there's like a surcharge for it. So we really need to make sure if you're doing Airbnb that you're disclosing that so that we can get it covered right. I had a story. I was talking with somebody a couple of weeks ago, and their State Farm agent had said, yeah, we take it as a rental, no problem. It ended up being a short-term rental. There was an incident at the property, and State Farm just didn't want to cover it. I think it was a water loss or something. And the agent ended up having to come out of pocket on it, or their insurance was going to get hit for basically agreeing to cover something and it not being covered. So, yeah, like I said, we can only do what's being told to us. So if you tell us what you're doing and we do it, if you do have a claim, things are more likely to go the way they should. Because we want to make sure we do a good job. If there's a claim in a day, we want to get it covered.
So for fix and flip now, which it's probably going to be a little more a vacant for a little bit longer than maybe just a buy and hold, and maybe I'm just looking for a tenant. Maybe I'm fixing up a little bit. And I know in the past you just mentioned builder's risk versus just a vacant policy. If I'm flipping the house and it's going to take me 3 to 6 months, not just to do the rehab, but while it's also sitting on the market to be sold. Let's just say that's a 6-month period of time by the time I buy it, by the time I close on it to sell it. What do you recommend there? What are you seeing? And it may depend on what side of town, but what do you recommend as far as like what we should do as the investor to try to insure this property? Because it's obviously going to be vacant.
Yeah, it's most of the time the true builder's risk policy is going to have either a 6 to 12 month time frame on them. So the true builder's risk policies, they don't really want them once they're finished and they're vacant. So we've had a couple where people have finished it and they're like, hey, it's going to be 3 more weeks. We're 90% done, but what do we do now? And then we end up flipping them to a vacant policy.
Within the same carrier?
Sometimes within the same carrier. Sometimes we'll have to do a different policy.
Oh, wow.
So yeah, that does happen. Times where we have to flip carriers on that. But yeah, like I said, there's not a whole lot that we run across that we haven't figured out a solution for. And there's not really a claim we've had that's been just. I think the biggest one, I'm sure we'll get into this, is what to do with the tax deeds.
We're going to talk about tax
certificates.
We're going to talk about that for sure.
Because there's a fine line on insuring something for what it's worth versus trying to cover your investment,
right?
Those kind of things.
But as far as a fix and flip goes, is a builder risk? Is that builder's risk until it's finished or almost finished, still vacant? Then we're going to probably switch that to just a vacant.
Yeah, and then like I said, preferably having a policy that has a builder's risk endorsement on there. But again, we've done a bunch where people just want to do the vacant policy that allows for, if you look at the manual, it allows for all the repairs. It's just, again, if you're, and I always tell people this: don't take an AC unit, sit it out there, sit it in the house. Don't take anything of value that can be pulled from that house. I mean, raw, lumber and things like that. For a while there, even that was, you had to worry about people stealing lumber.
Oh yeah.
So I think that's the biggest thing on the consumer side, is making sure that you're having things delivered, make sure you're kind of doing your own protection of that property while it's being renovated, because it can be subject to small vandalism situations and things like that.
Now, what about areas of towns? Because you're in Chelsea, we're in Greater Birmingham here. Are things going to be different? Obviously, the price of the home or the repair or the value of the home is going to come into play. But if we're in maybe a little bit rougher of a neighborhood versus Chelsea or versus a suburb, is that going to affect? Obviously, the value is going to affect the premium, but just I guess the risk.
Yeah, we've seen some companies, again, Foremost is one, and I don't really like how they did it. They shut down the whole county. So Jefferson County is,
they just saw risk in the entire.
You can be in Crestwood and you can go 3 miles down the road and you're not in a good area. And so I think when people are sitting in other parts of the country hitting buttons and making decisions on things like that, I think the Foremost thing could be fixed. Now, the risk concentration, that's a true concern, but I think Foremost could open back up with a couple of things. One would be a minimum deductible for like vandalism, maybe bump the rate a little bit, and maybe just picking certain zip codes that, hey, we haven't been profitable in this zip code. Let's block this one and go with some other, open up some other zip codes. But we're seeing that with some other companies, particularly on the primary side, and the reason I mention this for investors, if you're doing a flip in a certain area and maybe you're doing owner financing or something, and we've had this happen where the investor is used to paying a certain amount for this insurance. They want to owner finance it to somebody else, and that insurance we look at credit and all this other stuff when you go to a primary homeowner's policy, and the rate's astronomical. That's something to consider. Is what companies are doing business in these areas. When I go to flip this thing, is it in a flood zone? Am I going to have issues with a flood zone situation, or am I going to have issues with underwriting? I mean, if you're flipping a house, usually you've updated the roof, you made sure the electrical doesn't have aluminum wiring and things of that nature. But that's something I would say, if you're a flipper, to consider too. Obviously, you're considering what's the market to sell, here. But is there any other underlying issues, such as underwriting or eligibility for homeowners market, that might trip you up? So, and we've seen that with a couple carriers, like I said, where they're blocking certain zip codes. Pricing might be different if you're in this, what they call, this used to be the tornado alley, is you would see rates fluctuate because of the propensity of catastrophic storms blowing through. So,
before we get into some of these creative deals, you mentioned owner financing, you mentioned tax liens and things like that. We're going to talk about that here in a second. But is there anything I'm missing, anything I haven't asked you about or covered, that maybe something that's interesting that's come up, maybe something that's new that's come up in insurance that we as investors maybe need to be aware of?
The one thing we get a lot of requests for from the property managers is to list them as additional insureds. Okay. And that's something that all the carriers we deal with will do that. And what they're asking for there basically is, if something happens on your property and I'm managing your property and they try to sue the property manager, then we need to be, or they try to sue you, they're going to extend liability to the property manager first before it would hit the property manager's insurance. So that's an easy thing to do. And I'll even say, I've been telling my investors, it's really a good idea to require your tenants to carry renter's insurance and require them to carry a certain amount of liability and add yourself as an additional insured on the renter's policy. So that way, if there's a non-payment issue, you get a notice saying this person hasn't paid. Or the same scenario, if you say there's no dogs allowed, they have a dog, it bites somebody, and it hits their renter's policy, it would, somebody tries to sue the owner, there's a extra layer of liability
Yeah.
protection built in. It's super easy to do. Doesn't cost the customer anything. It's just hitting those tick marks and making sure they're
Mhm.
doing it. I think is the biggest issue.
That what you just brought up has come up with me before, where you're talking about a tenant who they're not supposed to have a pet, or they didn't disclose they had a pet, but they do have a pet, and it ends
Mm-hmm.
up biting someone. Obviously, insurance doesn't know about it because the property owner doesn't know about it. How
Yeah.
does that all get settled out?
I mean, usually, if you have a lease that says they're not allowed to have pets, I would think the insurance company is going to side on the side of the owner. I think if you don't have a pet policy and it's just kind of wild
Mm-hmm.
west, then
Mm-hmm.
you might have more of an issue.
Mm-hmm.
Usually, when we write the policy and they go out and inspect the property, they're going to identify things like that.
Mm-hmm.
But again, it happens all the time where you say no pets or no.
Right.
I have one gentleman who's asked us for what's the specific list of dogs that y'all don't like.
Right.
They want a list of those dogs, and that's ones we're not going to allow on the
Mm-hmm.
property. Um, so I think it's from a consumer standpoint, and I always tell people this: if the insurance company is telling you it's not a good idea or they don't like it, it's it's, it's probably not something you just want to argue with the insurance company because they're actually looking out for your best interest, or both of their best interest and your best interest.
Yeah.
So it's probably something to rather than just I'll just go find another insurance company, just ask what's the issue, why do y'all not like this, and let me make a note of that.
Mm-hmm.
It's probably should be the right answer.
Yeah.
So
Yeah. You mentioned inspecting the property, and many years back we did a video where we walked around a property and kind of
yeah,
look at here's what they're looking for and things like that. And I'll link that up as well,
yeah,
so you guys can see that, because that's been many years ago, but I'm sure a lot of it still applies.
it does. Yeah.
So is it you, or who goes out to inspect the property? What are they looking for? Are they just looking to make sure everything matches up? That you said this as the person who's trying to get insurance.
hmm
You said that the property was X. Want to make sure all that matches up, or
Yeah, we don't do it anymore. Obviously, technology's changed over the last 10 years. A lot of this stuff sometimes they'll send a link to the customer to do some pictures, self
mm-hmm.
inspection.
Mm-hmm.
A lot of it's just cost savings
Sure.
of trying not to put because usually what happens is we would do a pre-inspection to make sure the house was good.
Mm-hmm.
And then there was a third party company that would go out. So we're paying layers of, to send people out to look at these things.
Mm-hmm.
I would say that the top few things that they're looking for is, they want to make sure the roof is in decent shape,
Mm-hmm.
that there's not a lot of rotted siding and things of that nature that's going to cause issues.
Mm-hmm.
And if you're an investor, the roof is probably, if it's on its last leg, the insurance company might have a problem with it. And some of the companies steadily actually offers a roof exclusion. So if you say,
Oh
I
wow.
don't want to replace that roof right now, okay, we'll exclude the roof. We'll exclude the roof from
Hmm.
coverage. So they're pretty flexible on what they're doing, which is nice. Obviously, you don't really want a policy that doesn't cover the roof. But if you're not in a shape that you replace the roof right now, there's a couple companies that will offer
Interesting.
that. And then unusual liability hazards would be the other thing, which we talked about with dogs.
Mm-hmm.
Um, Pool on the property is pretty much a no go on a rental property because and most investors that's the first thing to do is get rid of the pool. They'll either fill it in,
Yeah.
pull it out, whatever. Um, the other one, there was one other one I was thinking about on.
Steps,
Yes,
rails.
handrails. And the other one that we just ran across, this was actually a company that had an issue on a primary home, which is usually not an issue. But the bars on the windows, if they don't have the quick release mechanism on them to where
Mm-hmm.
they can open it from the inside, that's a big issue
Mm-hmm.
from a fire. And if you're
Sure.
doing any Section 8 rentals, they're going to catch that stuff and make you do it anyway.
Right.
But insurance is the same way. If it doesn't have quick release
Mm-hmm.
mechanism, they're going to require you to exclude the liability, or they're just
Yeah.
not going to write it at all.
Yeah.
So,
It's good. This is good stuff.
mhm.
I do want to touch on tax lien, tax deed types of things, the subject to properties, the seller financing, which you mentioned. Some of these kind of creative deals that a lot of investors are doing. Let's maybe just kind of, I don't know if you want to clump them all together, or if you have something specific that you can talk to about each point. But But as far as the subject to, we were just talking a second ago. You guys will cover. You have somebody who will cover if I take over a mortgage and I buy it subject to the existing buy a house subject to the existing financing. You guys will actually cover that because the deed's in my name,
Mm-hmm.
even though the mortgage is not in my name.
Yeah, usually what happens in that situation, we've done a handful of these. I say that we probably do a handful of these a month. But usually what happens is we write the policy in the new owner who's on the deed,
Mm-hmm.
and then we would include the mortgage company, and then we would also include the owner that's still paying the mortgage and sometimes still living in the house. Some of these cases where they take it over and they're actually still they worked out a deal with the current owner that maybe they're going to stay and pay rent or something like that to keep them out of foreclosure. We would include them on the policy as an additional insured too. Uh, I haven't had a whole lot of issues, but a lot of the investors they don't really want that bill sent to the lender because it
Okay.
throws up some
Yes.
flags. So
Yes.
sometimes we'll just bill it straight to the investor. And I've even had some that just said we're going to leave the existing policy as the homeowner, especially if they're staying in the home. We're going to leave that policy in force and just let the mortgage company pay that one and not send them any kind of notice.
Mm.
And so I don't think there's anything wrong with doing that because they're kind of covering, they're letting the other policy stay. Now, if there's a claim, who's going to pay and who's going to pay what, there might be some questions there. I don't think there's anything wrong with doing it that way. I think sometimes when you have more complicated than that, that's pretty straightforward scenario. Sometimes when you have multiple entities or trusts and stuff involved, and the insurance company's just like, this is too confusion.
Mm-hmm.
We don't want it. But we've got a couple that are perfectly fine with it, and we've called and kind of ran through the scenarios, and they're
Mm-hmm.
familiar with it, so it hadn't been an issue.
Yeah, a lot of folks doing subject twos will put the property into a trust. So let's just talk about just trust in general because it wouldn't even necessarily have to be a subject to. If the property is in a trust,
Mm-hmm.
you guys will still insure it, I'm sure. It just
Yeah,
makes things a little trickier.
yeah, it's not really a problem. The trust itself is not a problem. I think when you combine too many things, too many trying to figure out, okay, who's the actual owner. I
Mm-hmm.
think for our end, we really want the owner of the policy to be whoever's on the deed. So if it's in the trust name, that's fine.
Yeah.
Um, so I think because we haven't had a case where that's happened where they've come back and pulled the deed. And again, this would probably where you'd have issue with tax certificates or tax deeds. But I think your safest thing is whoever's on the deed. That's who the primary named insured needs
Yeah.
to be on the policy.
In a subject to situation, the folks who are using trust, the trust is on the deed as the
Mm-hmm.
owner.
Mm-hmm. Yeah.
So that should be pretty straightforward. But you mentioned something a second ago, which is a great point about not sending the information if you do change carriers to the lender. Definitely don't want to do that with us in a subject to situation. So
Yeah,
that's a good thing.
like I said, I don't know what the issue is if the property is covered. I think if it's being bought as a subject to, the lender probably already knows there's some issues going on. So,
Well,
but
not necessarily.
okay, yeah,
Yeah.
but yeah. Um, but yeah, if they're behind on their mortgage or something like that, but I think as long as the insurance is covered, most lenders aren't going to have a problem. But I get it. I
Yeah.
wouldn't want you don't want to if you're being put on a deed, you don't want them to call that note due or something. All of a sudden, you got to
That's
go
right.
find financing on it.
That's right.
So I understand the point of let's just keep paying the payment.
Yeah.
I'll take care of my own insurance and don't send them
Right.
any notices. So
So you mentioned tax certificates, tax liens, tax deeds. Is there a scenario where they can be covered, and what does that look like?
we have one company that I've been told we'll take them, no problem. Tax certificates, tax deeds, whatever. I have not had a claim on one to where they've dug into that. So my thing is if you've purchased a tax certificate, say you've paid $3,000 in taxes on a $80,000 property, and you're wanting to insure that house for full replacement costs. From an insurance standpoint, to me, that's a little suspect. Okay. Well, I mean, because the best thing that could happen is you insure it and the thing burns down. I mean, so I don't think that's the intent of most people buying tax certificates. But from an insurance side, it's almost like, okay, you're buying this thing for pennies on the dollar and you want to insure it So I
Not
think
even buying that. They're just really just
they're almost like
catching up the
yeah, they're almost like
taxes.
a lender. They're almost like they're in the same position as a lender, where they're not
Mm-hmm.
really on the deed. They just have an additional interest in the property.
That's
They
right.
have a financial interest in it, but they're
That's right.
not in an ownership position. So what we've always tried to do is, once you get the deed, no problem. And that's
Even
kind
if
of
it's a
how
tax deed.
I think, if it's a tax deed, I mean, even foremost, which is the one that we want to make sure we do things right with. They have said, if it's a deed, and we've had a couple claims with a customer that's had a tax deed,
Mm-hmm.
and they've never questioned it.
Mm,
So I think the certificate is a little bit more difficult.
gotcha.
I think the deed is, we feel a little bit safer, and once you're to the point where you have an official ownership
Mm-hmm.
in the property. I know that there's still a redemption period after you have a deed, right?
Still a redemption period, and there's still you have to go quiet the title because you don't have a warranty deed. You don't have a general warranty deed.
Mm-hmm.
You have a tax deed.
A tax deed, yeah. So we don't we're not out searching for that, but we've got a
Yeah.
place for it. We'll put
Okay.
it that way.
Yeah.
So yeah,
No, and that's great, and that's great information
yeah,
for folks to know.
yeah.
And you mentioned seller financing a moment ago, so let's just paint a scenario. Let's paint a couple of different scenarios where maybe I could own a property outright. Okay, there's no existing mortgage on it, and I want to sell that to someone else on a note. Okay, so you just
Mm-hmm.
mentioned there's no problem doing that. They now have ownership, right? And that would just be a homeowner's policy for them.
Mm-hmm.
I would just be a traditional lender. It
Yeah,
could be a bank.
we would put them, the policy in their name,
Yeah.
if you're doing and then we would put you as the finance company
Yeah.
on there. That way you would get notices of any issues, cancellations, things of that nature. I've had some investors that will go ahead and say, I want the bill sent to me. I'm going to escrow this insurance
Yeah.
for them
Yeah.
to make sure it's paid.
Yeah.
I've had some investors that go ahead and keep a separate policy that the tenant does, that the owner doesn't know about, just to cover their cost basis. They may say, I'm going to go ahead and write a policy for me as a tenant, as a landlord policy, just so that I make sure if something falls through the cracks that my interest is covered. Almost like a forced place policy a lender would put on and they just pay for that out of pocket.
Right.
So we've done them several different ways, because at the end of the day, yes, you're owner financing to them, and they may be on the deed, but at the end of the day, you're still, it's really a landlord tenant relationship until they pay you out, because I know you have to foreclose and all that, but it's more similar to a landlord tenant situation than a traditional mortgage, I guess. So that's how we typically do those.
So, and then let's paint a couple of other scenarios. And I know I don't know how much you come across all this stuff, but these are folks are doing right now. They're doing this slow flip model, which I don't know how much you know about this.
Yeah, I was there for that meeting. Yeah.
Right. So it's usually a situation where, as the investor, I'm buying a piece of property, and I've got a loan on the property. Okay.
Mm-hmm.
But I'm also kind of seller financing it to someone else, but I'm doing it on a land contract. So they don't actually have a deed in their name. The deed's still in my name. It stays in my name until they've paid me off completely. Then I'll transfer the deed into their name.
Mm-hmm.
Deed's in my name. I have a mortgage on it from someone else. They're living in it. They're making payments to me on a land contract. Follow?
Mm-hmm. Yeah, I think so. So my question would be, how did he? I'm trying to remember. How did he insure that? How does Scott insure those?
He insured it on his own. Like he was the owner.
Mm-hmm.
He was the owner who had a mortgage on the property,
and he was
and because he stayed on the deed, his company's name stayed on the deed, and he just wrote a land contract to the person.
Almost like a lease to own kind of.
Sort of like that.
Yeah. I would say we would do it as a tenant, a landlord policy. So yeah, we'd do it the same way. We'd put it in the name of him as the owner, knowing that at the end of the day, this is going to transfer ownership later on down the line.
I think, like you said earlier, though, he also, what Scott would do, and I'll link up that video too if you want to learn about slow flips. But what Scott would do is force them to get the tenant, you're calling it, force them to get their own, like, almost renter's policy.
Yeah.
So he's kind of double covered there.
Yeah, and the renter's policy is, we're talking.
Well, maybe not a renter's policy, but I don't know if it was a renter's policy. I think he was talking about it's an actual policy.
Homeowner's policy?
Yeah.
So yeah, there might be, yeah. And what would happen in that situation is the insurance, if there's a duplicate policy out there, there would just be kind of a chain of, of who's supposed to pay what. Um, it's not anything wrong with doing it that way, but it might not necessarily mean that both. I mean, obviously both policies aren't going to pay. They're going to figure out, okay, he's the owner. Here's what we're responsible for. This one had this. It covers contents. Y'all take the contents. We'll take the, so. But no, I don't think there's anything wrong with kind of doubling up your efforts to make sure it's covered right, for sure. But yeah, it's some of this stuff can be pretty complicated, and
Yeah.
I think if we can just get all the information, I think the other one that I'm not sure I've done one yet. I've kind of kicked around my brain on how to do it, but these Airbnb operators.
Okay.
So if somebody leases a property from somebody for $2,000 a month, and they turn
Yeah.
around and
You're talking about
Airbnb it.
sublease situation,
Yeah, they're
basically.
subleasing to they're taking it, paying them a certain amount a month, and then they're making their money off the Airbnb rentals. So that who's really the tenant? So I think that thing has to probably be insured as a if the owner of that property. And I did have one call me about that, and I think that's where we ended up on it. Was if you're going to sublease it to somebody who's going to Airbnb it, we need to list as a short-term rental because
For the homeowner.
yeah, for the homeowner, because the person you're technically leasing to is not going to occupy that as
That's
a long-term
correct.
rental. So yeah, there's a lot of different things going on. People trying to figure out a way to get involved with real estate. I mean, that's an interesting. Again, we just took a trip and met with someone that now they own a few, two or three, whatever, but they've started a management company, so they're kind of the Airbnb operator. I think their deal is more about they give them a cut of the rent, but
Yeah.
a lot of people are doing this deal where they're actually taking the lease, furnishing the Airbnb, you're going out and spending the money, put the tent, the deal in, and and in some of it can be areas, like we're in here now, where they're renting a 2,000 square foot property, and somebody might be coming in to get chemotherapy at UAB for 3 months, and they're going to rent that property to these people for a long. So it's not the traditional Airbnb rental. May not be what's going on as far as weekend trips. It's somebody's coming in, they need it for 6 weeks, or somebody gets displaced from a fire and they need it for 6 months, and those kind of things. So it's interesting. It definitely keeps us having to learn, and it's the number of Facebook. Yeah, it's interesting. Where we get a lot of our information from, collaborate with other insurance agents. There's several Facebook groups that I'm involved with around the country, where I can go in here and throw a question in, and somebody's probably seen that scenario, or they've run across this. Now, not to say it's going to be the same with every carrier, but there's enough knowledge out there that we kind of lean on and we contribute to help other people out, and so that's been a big help for us. So,
last thing I want to ask you about is like an umbrella policy. Let's, for instance, if I have multiple rental properties, or if I have multiple house flips going on, where I'm buying a house every day or once a week, and I have to kind of stay on top of what's in my inventory, what's fixed up and still vacant and for sale before I've is there anything? What are the options I have if I wanted something to kind of cover me for kind of everything I'm doing?
Yeah. There's a few companies out there. There's one out there, Lloyd's of London product that we've got access to where it's a self-reporting policy. So basically, once a month, you go in there and you report any new ones, and it basically allows you to kind of have a rolling list there. You've got so many days, or maybe it's 30 days to report those new properties that you've acquired. As far as putting policies on one, we've got, Foremost will do it. Obviously, Jefferson County is an issue, but if you want to put all your properties on one policy, you can do that. The new company Steadily will do it, where you can put all of your properties on one policy as well, which can help some of the bookkeeping side. MSI, they actually have a self portal that you can get assigned, a self portal, and go in and kind of do your own management of your own property. A lot of clients don't really want to do that. They kind of feel like, hey, I'm not the agent. I might think I know what I need, but I need some advice.
Okay.
And so we don't do many of those. We used to do more of them, but I feel like it's better for us to, you know, you're paying us to give the advice.
Yeah.
Let us give the advice.
Yeah.
But the umbrella part that I probably get a lot of questions is liability. Like, how do
Mm-hmm.
I cover all this stuff liability wise?
Mm-hmm.
And we're working with a couple of companies one company that supposedly has just rolled out a new liability umbrella that we're hoping to be able to roll out and to investors, because that's a big hot topic. If you've got more than a
Mm-hmm.
handful, you're worried about
Mm-hmm.
how do I cover all these things if something
Right.
happens and they sue me on this one, they start going after all my properties.
Right.
And so that's a big one. But yeah, those are the solutions that we're trying to come up with, every day. And
Yeah.
I think we've hit on most of them for
Yeah,
sure.
no, for sure. And I appreciate you doing this. And I appreciate you kind
Yeah.
of educating me and the rest of our community, because insurance is one of those things you don't really love to talk about, but you kind of
Yeah.
need to talk about to kind of figure out, hey, how can we, reduce some of these costs in the best way
Yeah,
possible?
and it's ever changing. I mean, there's a lot of things that have changed in the last few years, and
Yeah.
I tell people, I'm like, we're probably not most people's favorite. We're probably on the line with used car salesmen, attorneys. I mean, we're not the most favorite
It's the
people right now.
necessary evil, though.
Yeah,
And that's, I
and
mean, it's necessary.
if
We're
I could
talking about.
find something else to do some days, I probably would. But so
Well, I appreciate you. And guys, I want to encourage you to get a hold of Joseph. We'll put all his contact information in the description. Get a hold of him. Even if you just have questions, maybe you're a newer investor to the state of Alabama or to Central Alabama, make sure you get a hold of Joseph for some of these questions. Maybe I didn't ask everything. And like Joseph just said, things are constantly changing. So maybe it's always a good idea to get the opinions of an expert. So.
yeah, I appreciate that, and we're all things insurance. So if you just got a personal issue or something, question, home, auto, whatever, we do it all. So
Yeah.
so definitely keep us in mind for any of it.
All right. Thank you, guys. Thank you,
Thank you.
Joseph.
I appreciate it.